Welcome back to Living Local. If you're in the market to buy a home, there are a lot of factors at play. A basic understanding of interest rates and what influences the future of interest rates can help you make better mortgage decisions. Here to tell us more about that, once again, is John Cornish with Key Mortgage Group. John, always great to have you here on the show.
Happy to be back. Appreciate it.
Well, you've been a guest on the show several times now, but remind us what your experience is with mortgage lending.
I think we're in between 16 and 17 years now. Started with Wells Fargo right out of college. Spent 5 years there and then went to work for a local bank trying to help them build their mortgage platform. Had a lot of success there, and then partnered up with some people to become an independent mortgage banker where we can focus solely on mortgage lending to really try to improve our process, improve the customer experience, just to bring our service level up a little bit higher. And that's where we're at today with the Key Mortgage, is continually trying to improve that and create growth in the state of Iowa.
Well, lots of experience for sure, so you know a thing or two about interest rates, which we're talking about today.
Yep.
So what have been the trends with interest rates?
It's been positive, and the nice thing is I think it's been a surprise to a lot of people this year. I think a lot of people saw interest rates increasing, and they've actually been going down pretty consistently since mid to late February, so that's been strong. And nothing ever goes up or down in a straight line, so we've had some blips, but for the most part, it's been very strong.
So things are trending up. So how do you figure out or predict what interest rates will do in the future? What factors are at play there?
You know, it's tied mainly to the U.S. Treasury and mortgage-backed securities, and I really think that the trend is going to continue. Again, like I said, nothing goes up or down in a straight line. But those are the two bigger parts. The short-term interest rates don't play directly into it. That's more for car loans, credit cards, home equity lines of credit, shorter-term interest rates. But for mortgage rates, we're looking at, again, the U.S. Treasury and mortgage-backed securities.
Now, John, when people are considering refinancing, is there a set percent that they should save or set numbers that you advise people that makes sense for them to refinance, or how do you approach that?
You know, I don't really believe in a one-size-fits-all or a blanket statement really for anything. I've heard people say that you have to save 1% or save 2%. And I've definitely seen people that it doesn't make sense when you save 1% because of other factors. And I've seen countless times where only saving 0.5% makes a difference. So the answer is no. I think you have to look at that individual person's goals and needs and find out what works for them. I don't like using that one-size-fits-all or like I said, that statement overall.
Right. Everyone has different circumstances.
Absolutely.
And it's a very nuanced topic. So when you're working with someone to determine if it does make sense for them to refinance, what kind of factors are at play there? What's the process look like for figuring that out? You know,
we do a cost-benefit analysis. So we look at what is the cost of doing the transaction, how much money are you going to save, and then we go through a series of questions. How long are you going to be at the house? How aggressively do you want to pay it off? Are you going to pay off any higher interest rate debts? Do you want to take cash out for home improvements? And we put everything together. We just we sit down and have a conversation, go over the pros and the cons. And really what our goal is to give people not only the information, but our advice so they can make an educated, decision moving forward on if it makes sense for them.
See, this is why it's so important to work with an experienced professional when it comes to mortgage lending, because they are experts in this type of field, and there are so many different factors there. It can be a little overwhelming for people.
We get some surprises from people when I actually tell people not to refinance. So they call in and saying, hey, I'm hearing this is a time to do that. And when I call them back and say, listen, really it's not in your best interest right now, and here's why, and people kind of get taken back by that. But it's not always the right thing to do just because it's the popular thing to do.
Wow, that is such an important point to make. Now, you said that lower interest rates are the trend right now. So how does that impact the housing market?
You know, it has a positive impact. It really does. Obviously it makes housing more affordable. It offsets the increases in property values, cost of materials for, building a new house. I think it also can get people off the fence when they're looking to upgrade a home. For an example, if you go, let's say, from a $175,000 house to a $275,000 house, you're only looking at an increase comparing interest rates from a year ago to where they're at now. So when you combine those things together, probably only a payment increase of $155 to $170 per month. So a lot of times that's the factor that says, makes somebody realize, you know what, now's the time where I can do this because it's more affordable than it was 12 to 18 months ago when interest rates were still higher.
That's an interesting strategy. So what advice do you have for people with a home or in the market to buy a home?
If you haven't bought a home, I truly think that homeownership is a wonderful thing, not only financially, but also quality of life, the memories you can have with your family. So if you're not, I don't think there's been a better time to look into it. At least talk to somebody to find out what it takes, how much it's going to be, and what it looks like, to take that next step. And if you already have a home, there's no harm in taking a look. I mean, literally, if you call somebody, talk to a professional to analyze where you're at and what type of benefit you can get, the worst answer you're going to get is, you know what, like I said before, unfortunately right now you're in the best situation possible, but it just reinstates or confirms that you're in, that where you're at right now. And for a lot of people, they can save a pretty substantial amount of money where it can, consolidate debt, really change their financial picture, so it can be a positive impact. So the answer is talk to somebody. Just have a conversation, pick up the phone, send us an email, reach out on Facebook, and it doesn't take very long to find out.
So if people do contact you because they want some more guidance or more clarification, what can they expect from that first conversation?
We dig in pretty deep. We really try to ask questions. I don't like to just give a blanket, hey, what are interest rates? I want to dig in to find out. I want an accurate quote for people. So what is your credit score? What are you trying to accomplish? What are your goals that you're trying to, try to get to? And then we help try to guide you down that path. So again, like before I said, I'm not a firm believer of just answering somebody's question as quickly as possible and getting them off the phone. I want to dig in deep and try to find out what your goals are.
Well,
and
then
try to figure out how we can help you get to that,
that's
that place.
Fantastic that you are really there to advocate for the person that's calling you.
Yeah, that's really the way that we try to differentiate ourselves, I think.
Awesome.
Going that extra step.
John, always great to have you here on the show. Thanks for the info.
Wonderful. Appreciate it very much.
All right, guys, for more information, you can contact John at qchomeloan.com. We'll also have those details posted on ourquadcities.com. More Living Local continues after the break. Stay with us.